Okay, stock market technical analysis. Drop me a thumbs up if you're finding value. Feel free to join the private member group, link in the description below. Let's get into the charts. So triple Qs on the hourly chart, I'm just going to point out kind of what I'm seeing. We do have Microsoft earnings coming up, so ahead of earnings, things can kind of go either way. It's kind of a crapshoot. So I'll just point out the key levels and potentially where reactions are likely to take place. On the triple Qs, one thing is we do have bullish divergence now on the hourly chart. So there it is. We had a little brief dip on price below those former lows on this hourly chart, and we've since recovered that. So bullish divergence, and we're holding support right now. I can easily see a rally post Microsoft earnings up to, the levels of resistance are obviously those former highs right there on this hourly chart. It's about 467.80. And then you've got this gap, this former gap right there, which is about 473.75 or so right in there. So those are two key levels. I'd look for a potential rally to stop if we're going to rally. Another alternative of what might happen, because again, it's kind of a crapshoot when it comes down to earnings. On triple Qs, if I go to the daily chart, we've got decent support. It's a former level of resistance right here. It's about 449.90 or 450 right in there. That's just below. All right, it's just not too far below. So we could potentially gap down on Microsoft earnings down to that level of support and potentially keep those bullish divergences on the hourly chart intact. Let me go back to the hourly chart and kind of show you guys. It's just down below. So if they wanted to dip it a little bit lower and maybe hit that support, or maybe even today, I guess it's possible, we have an hour to go, hit that support, you'd keep the bullish divergences intact and you'd be really a much stronger support because you're on a support at the daily chart down there. You can see if I roll out several reactions of resistance, it was support right through here. So that's what that's a potential to the downside. To me, it looks like an area where you're very likely going to get a pretty strong bounce if you're down there at that 450 area, 449.50. We may have just started the bounce now, though, and maybe we bounce up before we sell down. So again, it's kind of up in the air. I mean, we're at support now on the chart, but I suspect a big part of the price action will likely happen after the bell on the Microsoft earnings. So it's a little bit of it's just there's likely going to be a gap, some sort of a gap up or down based on those earnings. So one way to mitigate risk is to lower position sizing and then just see where things open up tomorrow. Microsoft, this is the daily chart. You can see the trend line. This is support here, very clean and clear support. We broke support. That's a sell signal. It did back test, and it's still kind of hanging out in this area. The problem that I'm seeing, the thing that I just don't like is the fact that it broke support right ahead of earnings. Usually you're not going to have large institutions taking position or, taking major positions right ahead of earnings. So, it could go either way. It's just to see things break down right ahead of earnings, they might gap this thing up, recover the support, or they could gap it down and probably hold it at the 200-day moving average is where I would think it would gap down to. So again, kind of a crapshoot. Moving on, we've got the banking sector, KRE. This one to me looks like it's topped out. Yesterday we had that bearish engulfing candle right there. Today, really no strength. I mean, it's not selling more, but it's just kind of holding near the lows of that candle. So that's okay. That keeps that candle intact. So again, very simple. Just treat this as, from my perspective, I'm treating this candle as the top. So I'd want to stop out on a move above that, give it a little bit of room for a slight pop, but you'd want to stop out on a daily close, probably above 60 would be fine. Otherwise, it's the top, and I think we're going to continue much lower. Minimum target on this one, when I look at it, there's this good support right here. So I could easily see this thing coming all the way down to minimum target really would be about here. It's about 52.77, but I think there's down in this zone would be a back test of that potential breakout. And that would be a decent area of support. It's a 50, 62, or the trend line, which is about 49.30, depending on when we actually hit. So this one still looks good as a short trade. Again, we know where the stop would be at, and then otherwise we let this thing run to the downside. ANF, this one looks to have taken out that big candle, that big bullish candle that they got on earnings. You can see basically big, huge candle that marked the top, and then essentially we popped the high here, but momentum's just been dropping off, negative divergence on the chart, and we've now taken out that low and you can see the selling starting to accelerate. So coming into some support, I think there's minor support right here at 130, 140-ish. Form a reaction there, little reaction right there. Oh, and there's a reaction. So I think you're probably going to get a bounce there. But if you don't, then you will likely flush straight to the 200-day moving average. And again, this is kind of you see where this thing came from. It's just a momentum stock. It's just straight up and then a buying climax. It's a momentum stock. When the momentum leaves, when it fades, it's not very surprising to see this thing just slice right through support. So I could easily see it just slicing right through and going down to the 200. Either way, sell the rip. If you bounce here, I think it would provide an opportunity to reshort and continue lower. Eli Lilly, LLY, breaking support so far today, and unless they can recover this by the close, which is about 802.40, then we should head down to the next level of support in the 200-day moving average. 727.86 right now, right in there. You can see lots of reactions right there. So, unless they get that recovery, then it should head lower. All right, whether they bounce it right at the open into resistance, it's very likely we're going to head down to the 200, probably ahead of earnings. We'll probably be down around the 200, maybe even undercut it right before earnings. So a sell signal on this one as of right now, and unless they can recover that level, again, should go low. Sofi reported earnings, and it really doesn't look too bad. It's been pretty volatile, moving up and down, but in general, not really breaking down technically. So one thing to kind of keep an eye out, this big bullish falling wedge here, you take the widest part of the wedge, which is about there, and that's the measured target at the point of the breakout. So that's that red line that I have way up here and kind of that circled measured target. Kind of looks to me, as of right now, like a bull flag. All right, you've got kind of this first move up, then you're flagging out, and then you take that next move up, and again, it looks like we're going to push up to $9. All right, so you see some sort of a impulsive move from this flag, and in general, it should be that that move that carries us up to around that $9 measured target. So keep an eye on that one. Costco continues to break down from this big bearish rising wedge. Widest part of the wedge, it's about right here. That means the measured target is, pushing us down to the 200-day moving average. And in general, looks like it's just continued that way. This one's not going to move that quickly. Typically, it's kind of a big blue chip stock, so it's probably likely just going to kind of grind lower. But of course, it'll move faster down than it does move up. So looking for this one probably has another, let me measure that out to the downside, probably another 8%. Yeah, probably roughly about 8, depending on where that 200, it might undercut that a little bit, but AMD reports after the bell as well. And it's a pretty weak looking chart. I mean, in general, we're below the 200-day moving average. It, obviously broke support back a while ago. Sitting at maybe a minor level of support because we have a kind of a minor reaction right here. But there's also a potential trend line just below from the lows, and we could easily see that gap down to that trend line, and then maybe you see some buyer step in there. So it's not very strong looking chart. If I go down to the hourly chart, yeah, you can see we do have some bullish divergence on the hourly showing up here. And so, in the short term, it's really hard to say what's going to happen right after earnings. I think we could see a bounce, but that doesn't mean that bounce is going to come from current levels. might gap down and then bounce. As long as the bullish divergence stays intact, if you gap down to support with the bullish divergence, then it would be a potential good area to bounce from. So yeah, I don't know. If I had to guess, I think we bounce here right around current levels, maybe back up to the 200-day. But I don't know if I'm willing to take a chance on it right ahead of earnings. Wheat's obviously been, kind of sucking wind, but in general, if you look at the daily chart rolling all the way back, this is a zone of strong support. All right. It's basically current levels of about 488. If I zoom in, you can see we're basically right there at that strong support. So, I mean, this is a objective area to go long. It's very strong support. I want to buy at support and obviously sell at resistance if you're trying to go long. And there it is sitting there at support. So I think, and then if I look at the hourly on wheat, on the hourly, we have bullish divergence showing up on the PPO here and not really on the RSI, I would say. So we'll, maybe it's got a little more work to do, but you don't need it on both. And then if I look at the daily chart, there is bullish divergence here on the RSI daily and there on the PPO daily. So bullish divergence on the daily chart sitting on very strong support. It's an objective long here. And that's really all I've got. So I'm going to get it out there and kind of pointed out the key levels. It's obviously higher risk right ahead of this week's a really volatile week. You've got big cap tech earnings and we have the Fed on Wednesday. So expect a lot of volatility, a lot of breakouts, false breakouts, rallies. It's going to be volatile. So shorter time frames are likely going to be more telling than the longer time frames this week to give us a clue on kind of where those little short-term breakouts are going to come, pop out of nowhere. As a swing trader, I think we still are headed lower. I do believe the top is in on the triple Qs and the SPY, but that doesn't mean that we can't have rallies along the way. So I'm going to get the video out. Catch you guys on the next one.